Well, the bad news is we stumbled out the gate pretty bad in 2024. The good news, that's how my next two guests make a whole lot of money. I want to bring in Market Rebellion co-founders, Pete and John Najarian. And first of all, John, my man, did the folks from the imaging folks say, listen, the Kango, where's the Kango?
I got to bring the Kango back, I think. There's just too much forehead here otherwise.
Someone told you it made you look smarter. But see, you got to decide between smart and cool. You know what I'm saying?
That's true.
All right, guys, let's talk about this market. Sort of a little weak here early. I mean, I don't think it's a big deal, particularly if you consider all the profits that we're taking. Want to get a sense from you. I'll start with you, John. Just from a macro perspective, your anticipation of what we should be expecting the early part of this year.
Well, first of all, the early part of this week and next week will still be some of the folks that were not willing to take profits last year, Charles, and the people that recognized losses last year. I think that's a lot of what's playing out right in front of us right now. I've got more examples today of that, but that's what I think. Overall, people are not willing to chase a market that was up 40+% for the NASDAQ. They're wanting to buy on dips. And right now they were getting a pretty significant dip in the NASDAQ. I think it goes a little further, Charles.
All right, Pete.
Yeah, I agree with John. I think that a lot of what we were seeing in the first couple of days of this year is definitely something having to do with taxes and everything else. And I think when you look at the kind of run that we had, and especially looking back at November, December, Charles, absolutely incredible run. Everybody wants to talk about Santa Claus rally. How about a turkey and Santa Claus rally? Because those 2 months were extraordinary. When you've got the Dow up 5,000 points, you got the NASDAQ up about 2,400 points. How about the S&P being up 6,600 points? All of that tells me that folks were getting a little bit antsy about how they want to shift and how they want to move themselves around in these first couple of weeks of the year. And immediately after that, we start getting into earnings season. So there's a lot in front of us yet. And we're still sitting there looking at a volatility that's relatively low at a 14, but it's definitely higher than we were down in the 12.5 area.
I don't know if I ever thought we'd be talking 14 as like, higher, right? 14 used to be like the ultimate sell signal. Pete, you mentioned the earnings season. It kicks off with financials. I know you're spying Citi. What's happening there?
Well, Charles, it's been absolutely amazing, the run that we've seen out of Citi. The run we've seen in all of the financials, quite honestly. You look at Goldman Sachs near all-time highs, Morgan Stanley near all-time highs, JP Morgan near all-time highs. But then when you look over at something like Citi, which had been beaten up and hadn't really performed, it has outperformed the month of November and December by a big ways, about 27% performance there. And we're seeing options being bought day after day after day. Literally at least 3 or 4 times per week, we have been seeing upside call buying in there. So that's been something that has been extraordinarily strong. You look at Citi, it went from 38 all the way up over 54 today. It's been on an incredible run, and we keep on seeing options being bought. They were very short-term, Charles. Now we're starting to see actually going all the way out into June, which is a long time these days. Usually people are looking basically 1 week or 1 month out. They actually even went all the way out to June with a very sizable trade as well. And they're buying in the XLF itself. So the combination of that tells me that folks are definitely positioning for the financials to be pretty strong probably when we get to the earnings season.
Right, and with those zero-day options, going out a couple of months feels like real old. Ironically, John, it looks like you're going the other way. You're not doing momentum, a little bottom fishing here. I know Peloton, also cannabis on your radar.
Right. Peloton, because, Charles, this was over $100, over $140. And now the stock is a $5 stock. It's rallying 7% today. And it's rallying basically on this news about this TikTok exclusive that they've signed for basically an athletic hub for Peloton and TikTok. I think that will drive the stock higher. I don't think it's going anywhere near 100 again, but I think it can get to double digits, which will feel pretty good for those of us who bought it at 5.
Yeah, you buy it. I mean, the 10 from here is not, ironically, not unreasonable. Hey, guys, let me ask you, it's all about the Fed, and it's the equity market's feeding off the bond market. The bond market feeds off the Federal Reserve. We get this jobs report tomorrow with Pete. If it comes in lower, under the street's estimates, do you feel, I believe we could really take off big time, that there's going to be serious panic buying. What do you see? How do you see it playing out?
Yeah, I would agree with you. I think the one thing that might be holding us back, at least from the NASDAQ perspective, though, is all you've got to do is look at that correlation, Charles, that we have seen going on between the 10-year and what's happening with the Magnificent Seven, if you want to call them that, or just the technology names themselves, specifically in the NASDAQ. That has been an absolute correlation. We've seen it. When it got up to over 5%, that's when we had the lowest area. But now all of a sudden, once we started to fall and we see that percentage drop all the way down into the 3.9 area, now we're cruising back up towards 4. That's going to shift around. That's going to give people the right to whether or not they want to be on the risk side in some of these NASDAQ names or not. And I think a lot of that really does hinge upon the 10-year.
All right. Pete, John, my man, between you and LL, man, I mean, you got to keep the Kango going. That's all I'm saying. Happy New Year, guys.
Coming back,
You're the
Charles.
best.
It's coming back.
See you soon.